Welcome to this week's Wealth Management Lecture Series with Patricia Elbaz. Welcome, young and new. So Patricia is a lecturer at King's College at the LSE, at the French University ESB. And she's lectured here before at Regent University. She's going to tell us about technical analysis and in particular trading in volatile FX and equity markets, and we've noticed them over the last few months. So we're looking forward to hearing from you.
Volatile is the word.
Volatile is the word. So over to you, Patricia.
Lovely, thank you. It's a pleasure to be back here. What I'm going to do actually is, my background is as a chartist. So I started working I did graduate in finance and French, did some work at the Tuke in Toulouse, and then came and studied at Nottingham. It was an exchange thing coming. I started working for Standard & Poor's MMS, and it was really in the days where, if you like, people were very focused on results, proprietary trading, getting, the most important thing was actually results, trading and getting results. And what I found more and more is that using not just economic data, but using historical data, you could actually get some really good forecasts. So I started learning more and more about tech analysis. I had a boss who was from San Francisco and who was really, really strong on that. So I picked it up. And the big thing initially is, does it work? Why do we look at historical data to tell us what's going to happen? And the more I used it, the more I found that actually there's a lot more to it. So then I specialized in that, worked for Standard & Poor's and worked on their FX desk and ended up spending about 10 years there. And since then I've been doing a lot of consultancy work, a lot of lecturing, and also keeping some of my old clients. So what I really want to do also is to make sure that it's just going to be like 45 minutes today. What I want to do is just to give you a taste for it. I mean, some of you will move on, maybe working on some of the desk, FX desk, maybe bonds, equities. Some of you might work more in M&A, maybe hedge funds, things like that. But wherever you go, I think it will crop up at some stage. And I think it's good to have a knowledge, whether you're going to use it and whether you actually think, oh, actually it works, or total nonsense, I can trade without that. It's good to know a little bit about it. So let's do that. And whilst we do it, we also do exercises, because I like to make it interactive, not just me talking, and it can be really boring. So I want to make it interactive and to make sure you enjoy the topic. So the thing that you do is, probably you've learned a lot about a figure result. So what's behind that? It's all the fundamental analysis. What's happening in the economy, what's happening with a certain company, he's coming. All the things like the data, everything within becomes fundamental analysis. So everything related to economics is all the analysis, earnings, dividends, all of these things, part of the fundamental analysis. And obviously it's something which is important, because if we want to buy a stock, I want to know what their balance sheet is like. So that's going to be really important. So that's a part of it, fundamental. The technical is looking at everything which is in the price. So what does it include? It includes things like volume. What's the volume showing? If there's been a bounce, has the volume picked up or is the volume flat? It's going to tell us things like looking at order trends, not just looking at the long-term trend. I want to come to the short term and see what's happening. So all these factors are what makes up technical analysis. You look at price, volume, open interest, all these things. So these are the two major things that you're looking at if you're an economist, if you're a trader. And more and more, I would say today, people are looking at them together. So I wouldn't say you're looking at them in isolation. I mean, I do have friends who are chartists and who are literally in a room with lots of cycles and everything. And for them, that's it, they're just looking at that, and they're looking at everything in isolation. But I'm not one of those chartists. I think you have to look at both. You have to look at the big picture, and you have to look at what's happening both sides, the fundamental, the economic factors, and you have to look at the price action, historical data. So, for example, if I look at this chart, I've got the S&P 500 here. If I say to you, what's the long-term trend? So the trend going back from, let's say, 2, 3, 4, 5 years ago, what's the long-term trend looking at that? What would you say? Yeah, so it's bullish, yeah. It's long-term, it's quite straightforward. You've got this trend line going from here all the way up, and the longer the prices are above the trend line, the stronger you think my bullish argument is strong, because we are still above this long-term trend line. So even when we saw the in 2015, 2016, when we saw that dip there, we still had a bounce off that trend line. So your long-term trend line is bullish. Now, if I said to you, what about medium term? If you look at the top there, can you see there's like a top there? What would you say the trend is there, medium term? What would you say? It's more of a range, isn't it? So it's more of a range to possibly bearish, because you actually broke through that 2,500. So if we look at the long-term trend, bullish, medium term looks like topish to rangey, and then short term, we couldn't see in this very chart, because this is the weekly chart. So short term, I want to have a look at maybe from 2 weeks' time. I want to see exactly 2 weeks' time what's happening. And short term, it looks more bullish. So in our minds, before we do anything, before we take any position with the S&P 500, we have those 3 time frames in our head. So your long term, your medium term, and then your short term. And then when we look at that, everything on the top there, which is your resistance. So it's all the important levels on the upside. And on the downside, you would have something called the support. These are just terminology, but they also help you with knowing how the trend is going. So similarly, if I look at this chart and I say, okay, what's our long-term picture? Long-term is, what would you say?
Bullish.
Yeah, it's quite bullish. Now, would you say medium term? Medium term, what would you say it is? Similar to the S&P, isn't it? Kind of topish to down, yeah. Looks quite topish to down. And you know, when you've got a double top there, that's when you're worried, because strong resistance, yeah. And then shorter term, similar to the other one, you've got a bit of an uptrend, so you've got short-term uptrend. Now, what's interesting as well, when you look at this chart, if you've got your long-term trend line, can you see how initially it was within that trend line, and then you had this sharp move higher, which was around here. You had the sharp move higher, and then you had the double top, and then you know the big question now, which everyone's wondering: have equities seen the rally? You know, is it the end for equities? I'm personally not as bearish as a lot of people on equities. I don't. We were talking about it earlier on. I don't see this making new highs straight away, but I don't see it as being the top and for it to come all the way down. Some of the tech stocks have tried to just recover from this big move. So overall, if anything, I would be flat to slightly higher, but not totally bearish. And overall, the picture shows us that in a longer term, we're still in a very, you know, we're still in an uptrend, not a strong impulsive uptrend as we saw around 2016, 2017, and then we had a down move then. So this is what we do. We try and find out the trend lines, see what's happening, and then from that, have the picture in your head. What's my long term, medium term, short term? Right, so when we look at tech analysis, what are the principles? So the main principles is that everything is in the price. So everything which has to be taken into account is in the price. The price moving trends. So moving trends, you've got different types of trends, but the price moving trends, you're looking for patterns within that. And the last one is that history repeats itself. And when you think about it, when you have a price, let's say there's a data which comes out, the data is positive, but actually the market goes down. And you think, what's happening? So it's all about the market psychology. So it's expectations. people were expecting that to happen. So when it actually happens, you get the sell-off. So this is why there's so much market psychology within the price that, as a chartist, the price is the most important thing. Right, so some of you may have done this in economics. Different theories which tell you, you know what, you can't actually beat the market. You can't actually go ahead and find a strategy and beat the market. So the efficient market hypothesis is, it's so efficient that you can't actually say, I can trade off this, I can see a chart pattern, very, very much the things against analysis saying that you don't actually have evidence to say that it can work. The other one, which is also saying there is a very strong feeling that you can't use analysis because it's random walk theory. Prices move randomly, the market moves randomly. You can't actually say it's going to repeat itself. So it's always good to see, if you like, the criticism behind things. And, you know, some of the studies and research which has been done, one of the most notable one is by the Princeton economist Burton Markey, a random walk down Wall Street, in which he found no evidence saying that, okay, by using this kind of analysis, you could make profits. So I always like to say, you know, this is what we're using and it's great, but there are obviously other research saying, no, you can't actually beat the market and prices move randomly, so you can't actually find that. So it's always good to look at the criticism towards that. So the first thing is Dow Theory. Charles Dow, if you like, is the one who set out all the things to do with tech analysis. And what he said was, as far as 1882 was when the company was founded, and 84 was when they wrote their report. And what he said is actually there are three trends. We talked about the long-term, medium-term, short-term earlier on. And he said it's kind of like in the sea, you've got the tide. So the primary trend is like the tide, it's the major trend. And then you've got the secondary trend, which is like the waves, and the minor trend, which is less than 3 weeks, and it's the ripple. So it's just a comparison. And within the trend, he would show that. So the primary would be your major trend. So within the primary, you could have corrections. So in this case, we've got the market going up, but obviously you could have the same thing with a bear market. So you've got the corrections within the primary trend, and then within the secondary trend reaction, you have those little ripples, which are the shorter term trend. So it's a way of looking at the market and the different types of trend. Now within those trends, you can have phases. And I always think about phases as, if you like, development in an event. So the accumulation phase is when you've got enough information to say this is a good time to buy. So it's, if you like, it's informed buying. You've got maybe positive reports and everything looks good, and you think, I'd be silly not to buy that. This is the time to buy. It's informed buying. You've got good reasons to buy. The second one is increased buying phase. So you haven't caught the beginning, but prices are going up quite steadily, and a lot of factors are confirming that it's going up. So, you know, you're coming in at the second stage. And the third stage, which is the hardest stage, because it's when you've got a turnaround, distribution phase. And I always think about this as the time where everyone talks about something. So you might be getting in a cab and they say to you, oh, I'm buying this, do you know something? It's a bit like the Bitcoin in a way. You know, I'm buying this, are you getting into it? So it's increased media, too much information, too much, everyone's talking about it, and that's when you start thinking, is it time to go the other way? And I also look at the FT. So the FT's got the main section, and you've got the companies and markets section. Whenever I see something from the companies and markets on the main section, I start to think, okay, that maybe it's time to do the opposite. Because all this information is coming into, everyone's talking about it, time to be a contrarian. And sometimes, I'm not saying all the time, but sometimes you can get some good turnaround signal just from looking at that. So we looked at the three phases. What I want to do now is just to have your ideas. I want you to just do it maybe in pairs so it's easier. And just to jot down here, if you look at these, the FTSE 100, if you can show me the 3 trends you would put on there. And the other one which I've got on there is the Hang Seng Index. Now what I've got, which is also interesting, often we look at moving average. It's just an average of the last X number of days. And in this case, on the FTSE, it's a 200-day moving average, because it's a very good medium-term one. So if I can just pass this through, and if you can just look at the trend, tell me what you think of the trend, and use it on both of them. So if you can just share them, yeah. Lovely. Thank you. Another one? Another one. There you go. Thank you. Two of those. There you go. Thank you. Oh yeah, I've got 2. Phew. Okay. Lovely. So I just give you a few minutes and I'm going to go through that with you. Yes, please, yeah. Sorry, if you've got rule, even better.
It's like just a little wrinkle.
Yes, so in this case, long medium short term. So if you look at yeah, it's quite straightforward, isn't it? If I'm broken through that and
and now maybe it was very serious.
yeah, exactly. So medium term, I would say so medium
And short term is
term, I would look even from this area.
starting to go.
Yeah.
¿Qué?
Yeah. So you just in the regions of, yeah, like that. If you like a previous height, or like say the ceiling, the level which is psychological. All of this is big numbers. 8,000 wow, so far away, that's
Could be completely wrong.
and that's the big numbers. Yeah, exactly. So got all this so that was going back to the yeah, exactly. So the financial crisis there was all that kind of thing. But then that's behind it, really gutsy. And Julie so what happened to it? So when that happens, so then sometimes there's a time if it's proven it's actually justified, but sometimes it's kind of like information time to come in. And then I'll let you have a look at this one, which is similar. How we're doing on it. You've got your long-term
Okay, this is
Total, podrías continuar. Sí, ¿no? Paula. Sí. Ya, la mía también, por eso no quería. Porque luego se quedan ahí. Como ven, viernes. Sigue las cabrones. Sono sì,
Good for us. Yeah, so how are we doing?